Welcome to Getting Rich Together, the show for successful women who are looking to take their financial futures to the next level. I'm your host, Shama Bunton. When I started my wealth building journey, nobody knocked on my door to give me all the answers. So I want to talk to the experts who've done it and bring the answers to you so we can discover the right opportunities that will help us achieve the financial futures we've always dreamed of together and have fun doing it. So let's dive into this episode and start getting rich together. I am here today with the incredibly kind, generous, and brilliant Wendy Li. Wendy, everyone today knows you as the co-founder and chief investment officer at Ivy Invest. What I love about the work you're doing there is how you're really giving access to a wide variety of asset classes under one umbrella with your work at Ivy. We're not going to jump right into all the magic that you're creating and how you're democratizing access. We're going to take it back to a very young girl. But Wendy, thank you so much for being here today on Getting Rich Together. I cannot wait for your story to unfold.
Thank you so much for having me. I'm excited to have this conversation with you.
Oh my gosh. Okay, so before you were a prolific investor, before everyone wanted you at all their big firms, before you were at the Met doing all this cool stuff, I want to take us back to a young Wendy, a young girl who was maybe somewhere between the ages of 7, 9, 10 years old. Where was she? What was she doing? What were her parents like? And what was money like around you?
So that time period, that stretch from the time I was 7 until the time I was 12, actually, there were enormous changes in our family circumstance. And so I think there's what it felt like for myself and our family and our relationship to money when I was 7. And then there was sort of a different narrative around what it started to look like when I was 12. And so what I mean by that is I grew up in Pennsylvania, and my parents immigrated to the town that we lived in Pennsylvania because my dad was pursuing his PhD. So immigrated, was doing his doctorate work, and as a doctoral student, he was not being compensated very highly. A lot of our finances at the time were really tight. It was my mom who had been an accountant and a manager. When she immigrated, she did not have the ability to transport any of those credentials with her. And so in Pennsylvania, my mom took on a lot of hourly work to help support our family because, again, my dad was busy being a graduate student pursuing his PhD. And so finances were very tight when I was 7. We actually moved around a bit because, again, when finances are tight and you're renting, a lot of times it comes down to what's available to in that region at the prices in which things are available. And there are certain things from that period of time that I realize now that I'm older that sort of impacted me. One was, like I said, we moved a bit from rental to rental, always in the same town, but we did move a lot. And so to this day, I find myself holding on to things that I probably shouldn't, just because I have this memory of constantly having to purge things when we were moving when I was small. And so my husband now reminds me, it's okay. We don't need to hold on to all of these knickknacks. And so now I'm I consciously try to not be somebody who owns too many little unnecessary items. But part of that was just growing up and not having a lot in terms of material wealth, but certainly having a lot, a huge amount in terms of love and affection and care. My mom especially is somebody who, if you ever meet her, she's incredibly warm. And so had always inspired in me this concept that I'm capable, that I could be whatever I wanted to be when I grew up. And here we are in this country where the American dream is possible. And so I'm meant to be a product of that dream and to pursue my education. And, my parents came to help my dad pursue his own education and to build a life here. But that ultimately meant it was to give me the opportunity to build whatever I wanted my life to look like ultimately. And then so as I mentioned, that was sort of when I was 7 and younger. Finances were a lot tighter. As I got older, my dad finished his doctorate and he graduated and he went into industry. My dad ultimately worked in the semiconductor industry. As my dad went into industry, all of a sudden, as you can imagine, our circumstances changed. My parents bought, bought our first house, and then we upgraded to a larger house ultimately. And by the time I was 12, it felt like much more of a traditional middle-class American lifestyle. And there are certain things that I think because those are formative years from 7 to 12, there are still certain things that stay with me about my relationship to money, the way I think about the risks that I take that are informed by that transition from the time and our family circumstances from when I was 7 until, when I was 12 and things were quite different.
Wow. And so when you were, let's say going into high school or starting to formulate, what your identity is in the world, were you then, a student who is deep in the books? Were your parents because obviously doing a PhD means, studies are just the foremost of what's important. So were your high school days spent selling ice cream on the weekends, or were you behind books, or were you hanging out with your girlfriends? What was life like for you in high school?
I remember high school just being some of the best years. My closest friends are actually still my friends from high school, my closest girlfriends. They're actually my
I love that
friends.
so much.
Actually, my best friend is my two best friends, I should say. They've been my best friends since we were all 6. And so they are still among my best friends and, picked up more really tight girlfriends in high school. And so obviously as an adolescent young woman, your friendships are super important to you. I think that was probably one of the few things my parents and I did occasionally fight about, and maybe more frequently in their memories than in mine. I have all positive memories, but I'm sure I scarred my parents a little bit on this one. But there was definitely, because it was just a difference in sort of cultural expectations, and I was I have always been a very naturally good student. And so academics came easily to me, doing well in school came easily to me, doing well in the SATs came easily to me. And not that I didn't work hard to get high scores on AP exams, and I certainly did. But I do think because many of those things came more easily to me, my parents, I had more time to spend with my friends, and I wanted to do that. And my parents were always, I think, more conscious of whether or not I was doing enough from an academic standpoint. But then there was not much to say because my grades were good and my test scores were good.
I love that so much. And so did you know then in high school that you wanted to go in finance? Was that something that happened in college? What did you think you wanted to be in the world when you were in high school?
Not at all when it comes to thinking I would pursue a career in finance. I mean, and part of this is I grew up in a place called the Lehigh Valley of Pennsylvania. And so this is an area where it's not, at least in my area growing up, I just did not have a familiarity with what finance is. I didn't have a familiarity with that industry or the types of jobs in that industry. I think especially growing up because that's not where my parents worked. It's not where my friends' parents worked. In my mind, I had a lot of career aspirations that I think were just very, I don't know, I don't want to say stereotypical for somebody who comes from an immigrant family, but they were in my mind, I was I'm going to be a lawyer because I know that, there's power in being a lawyer. It's a well-paid profession. And so that's what I actually thought I was going to be. And then I went to college and went to college here in New York City. And when you go to So I went to Columbia, and on campus at Columbia, one of the heaviest recruiters of students on campus are the Wall Street banks and the financial industry. And so it was very hard to avoid financial services as in a career path. And certainly it was something that I was very exposed to and learned a lot more about during my college years.
I love that. And so obviously when people think about finance, I think when you're growing up, it almost feels like it's such a black box. It's like finance. And then you start to get into it and, oh, there's so much more nuanced here, right? And there are so many like specific ways to think about this. When you were in university and getting ready to move on into your professional career, how much knowledge did you have of the nuances of finance that you would eventually want to get into?
Candidly, very little, right? So Columbia does not have a finance degree per se. Columbia offers an economics degree. So it is much more theoretical in terms of the course of study versus the practical in terms of what actually would be the day-to-day analytical work that somebody would do in different roles in finance. And so, of course, I had a lot of perspectives and like ideas for what it would mean to work in finance, but did not actually, I think, truly know until I was in it what any of the things we learned. I think this is why things like internships are so valuable, because what you learn in a book and what you learn from an academic standpoint, it's so different when you're actually in it day to day. But I will say one of the things that I did have a very clear view on, and going back to where our conversation started about my own childhood and some of those experiences, one of the things I was very clear on is that this is a lucrative career path. This is a path that provides stability and financial gains. And I knew that was, and in many circles, I think it's crass to say this, but I think here we can be really upfront and honest about it, is that was important to me. It was important to me because my parents worked so hard for all that they had. They worked so hard and devoted almost all of their resources to me and my younger siblings. And I knew what it took for my dad to get and build the career that he had. And he didn't really, again, being an immigrant and doing his doctorate here in the States, his career started much later in his life. And so he did not achieve a level of financial stability until later in his life. And so when he did achieve that, so much of it went toward investing in myself, investing in my siblings. And I went to college, and I'll say this bluntly, because my parents fully paid for my tuition while I was there. I didn't graduate with any amount of debt. And so it was so important to me to be able to then build on what my parents had given me and pursue a career path that would provide the type of stability and the type of ability to then ultimately support my parents as well when the time comes. And so I knew that was important. And the good thing is, it turns out, again, being somebody who's more analytically oriented and somebody who has a little bit of a competitive nature innately, turns out that finance and investing and all that comes with it, genuinely a career path that I love and enjoy. And, it all worked out, even though I didn't entirely know what I was getting myself into, other than, oh, here's a good lucrative career path. It all worked out because it really suits me and who I am innately and the kinds of things I'm interested in inherently.
I love that. And so getting your first job out of college, was it, let me go in and negotiate for something? Did you already have your wits about you? And here's my sense of worthiness or what I deserve. Did you already know competitive benchmarking of where everyone's salaries were coming in? Finance is historically one of those areas where there are more men than women. And so how I know things are starting to balance more and more, but not quite still there yet. And as you were deciding to carve your path forward in this male-dominated industry, how did you reconcile things or think about things like salary and positioning or title early on in these days?
I had, I think, really not a strong perspective on these things. I really went into it, and I think part of it was I was so excited and appreciative of the opportunity to go into this career path that I don't know that I went into it quite naively from that standpoint, right? What would be a competitive salary? And part of this, and I'll step back for a second, part of this is the preponderance of recruiting on Columbia's campus, and certainly at that time, this was mid-2000s, pre-GFC, the preponderance of recruiting came from financial services firms, from Wall Street firms. There was a clear standard for what first-year analysts make. On the other hand, I had elected, for better or for worse, partly to what you just spoke to, finance is a very male-dominated industry. I elected to take a role in investments that looked and felt different from all the others I had seen, which is I went into the investment office for an endowment. I went into the investment office for the Met Museum of Art. Part of the reason I chose that role, even though it looked and felt very different from the others, and partly that is what appealed to me about it, but part of the reason I chose that role as well was at the time that I was joining, the two of the very senior women at office, two of the very senior investors in that office were women. And I ultimately, by the time I joined, one of them was the chief investment officer, the other was the deputy chief investment officer. And I entered into an investment office, a really high functioning, high performing, extraordinarily talented and thoughtful investment office where all the decision makers were women. And so that really appealed to me. And I think that was a big contributor to why I chose this particular role. But as a function of it not being part of a large bank with a number of other analysts in my class and prior classes that came before mine, I didn't have a good sense for what the benchmark should be for comp. I did fortunately have two senior women who I think were inclined to be fair toward me. And so that I benefited from. And I think in many ways, so much of my career path has also been a function of I didn't come from a background where I knew enough to ask for certain things or to negotiate for certain things, but I have been really fortunate in that I've chosen to work with good people who have chosen to treat me fairly. And as I've gotten older, I really appreciate it because that's not necessarily the case, and it often isn't the case.
Yeah, that's incredible. It's so powerful that you found yourself working with these powerful CIOs at a young age. To be able to have that sort of modeling around you is really special. I wish that was more of women's stories around like great modeling and what things can look like and what possibilities are. As you then started to go from being a student to then moving into these years of earnership, did you already have for yourself sort of an idea of, or at what point rather, okay, I'm going to save money, I'm going to do the 401k matching? Had you already had these ideas from, let's say, the college days, which is all right, here's Wendy's game plan and we're just going to go after it? Or was it sort of picking things up as you went? How did your own personal knowledge of your finances grow with you as you were taking on these roles in finance?
I think a lot of this goes back to what are the patterns that we observe in our childhood? What are the patterns that we grew up with? Even though my parents had very little, and when my dad particularly was in his grad school years, our family, finances were tight. My parents were incredibly frugal. They continue to be so to this day. And that really stuck with me because I innately am a saver innately. I really value that freedom that gives you. I have such a deep aversion to debt. That also comes from my parents. And so it was really challenging, so it was for me, I had in college as well, I worked 3 jobs in college at one point. And part of that was it was important to me to have my own spending money. My parents were already paying for my college tuition. I already felt a pretty high degree of not guilt per se, but recognition that was quite a sacrifice for my parents. And so it was really important to me to have my own spending money, and that, translated over into my working years post-college, where when I had my first full-time role where I was making more money than my dad did in his first year of, his first year of industry in the semiconductor industry. And so for me, I just thought this was like such an obvious thing for me at the time, which was I was in my 20s, very young. I didn't need a lot. I found an apartment where I was probably not supposed to be doing it, but I sublet the other room. And so I lowered my rent dramatically. I mean, I was at one point I was at one point paying less than $700 a month in rent in New York City on the Upper West Side because I was just very creative about different ways I was going to keep my budget really small so that I could save as much as possible in my 401k. Actually, in a nonprofit, it's called a 403b. So save as much money as possible on my 403b and save as much money as I could to sort of put a little bit into the stock market every month and start investing. Those were lessons that were just, again, going back to what are the patterns that you observed in your childhood? For me, the pattern I observed was save as much as you can, live within your means, and don't take on debt if you don't have to. And if you can build a cushion for yourself, you buy yourself the flexibility to do more and have a greater array of choices down the road at some sort of nebulous point in the future when you want those options.
I love that so much. And so, I mean, obviously, starting to invest in the stock market in your 20s can pay off in spades. And it's also a great habit to start with. Did you find your friends at the time, as you were starting to build relationships, were you sort of, did your friends look to you and go, oh my gosh, look at what Wendy's doing? Like, we also need to start investing in the stock market or start to think about money in that way? Or were you an outlier sort of within your cohort?
It was definitely the latter. I was an outlier and I recognized it. And I've never really, our having this conversation now is really the first time that I think back to how much of an outlier I was, because as you so often allude to in your conversations, Shama, it just was not a topic of conversation among my girlfriends and my friends post-college, right? Aside from my friends who did also go into other careers in finance, and even then we didn't talk about our personal finances, right? Many of my friends didn't go into finance, and we definitely didn't talk about investing or our personal finances. I think we all were in New York in our early 20s. And so we all had sort of a similar budget for going out and things like that. And so we had very similar sensibilities in that way, but we did not talk about, the fact that I probably paid a third, half as much in rent as some of my other friends, and I was saving all the rest and investing it. Definitely not something we talked about. And reflecting on this now live here with you, I think that's probably something that more young women should talk to each other about, because I'm pretty sure my now husband was talking to his friends about these things, and that builds up, right? That comfort level around those topics, it builds up and compounds over time. And so I think just talking about it with you now, I'm like kicking myself, like, why didn't we talk about those things?
Wendy, very few people did at that time, right? I think sometimes we make a lot of assumptions when we're younger. We don't often know what's going on behind the scenes with our friends, because we're always, as long as everyone's splitting the bill for dinner, no one actually knows what's going on, right? So there's these interesting moments of our 20s. Did it ever become apparent within your cohort group as you were growing up, or as you were switching jobs, that all of a sudden Wendy has been smart with her money, and like you were able to do things with your capital? Were there any moments where you were like, wow, like I'm doing a really good job here, and this is affording me to be able to do fill in the blank?
Yes, I think the biggest one was I knew I wanted to buy an apartment in the city. And I think even if I didn't explicitly earmark my savings and investments for that, I knew that ultimately having a sizable down payment was going to be a big part of being able to achieve that goal of buying an apartment in the city. I had a goal of buying an apartment in the city before I was 30. And my now husband and I, we did buy our first apartment. I hit that goal from that standpoint. And a lot of that down payment was possible because of the extensive saving and investing I had done starting from my early 20s.
It's so exciting. It's so amazing when we get to be like, I did that, like there's you made that happen for you, and your family must have been so proud of you to be able to see that.
I think they definitely were. I think actually a lot of folks were surprised by how much I had managed to squirrel away. But part of it is really, we just didn't talk about it, right? And I think about that was something that I was doing for myself because it was important to me. But as I think about the folks who are listening to this conversation now, regardless of how old they are or where they are in their lives, it really speaks to the importance and the power of compounding to be able to have dollars invested for a longer period of time, right? Like the dollars I was putting into my savings each month were not enormous, but they certainly compounded over time. Now I had I don't know if you'd call it the great fortune or the sort of the timing is what it is. A lot of my investments were just, I continued to invest through the GFC, right? So I didn't pull away from investing when things got really scary. But part of that is because I was also a professional investor and I was doing that in my day job. And I had, I think, a really great comfort level with investing in general, since that was, again, my professional day job. But that type of market environment where everything is on sale, in some cases on fire sale, and the ability to continue to invest through difficult market cycles ultimately can allow greater wealth building in a shorter period of time than if we did not necessarily go through that. And I recognize that the GFC was a really difficult period in a lot of other different ways. But if you were somebody who was younger and investing and consistent, it was also an opportunity to capture some outsized gains in that period of time.
I love that. I think it's a wonderful reminder just in terms of market volatility in general on what's happening in the world and this sort of focus on consistency. I think you're a really great testament to that. Now, I'd love to just double click on sort of your career. You've had a really interesting career, and your sort of line of work in investing, I think, is really unique. And I think it offers to folks a really different perspective. So can you double click on sort of the career trajectory and how well sort of planned out was it? My gut tells me Wendy Li knew exactly what she was doing at every moment and had a plan and was like, all right, this is my last day here. I'm starting here. This is the master plan. How calculated sort of has your career been? And can you share a little bit about how unique your point of view and experiences have been?
I think you're giving me a lot of credit, Shama, and I appreciate it. My career path it's been linear, but not calculated per se. And it even starts with my choice to go into, at the time, it was a cottage industry. Endowment and foundation institutional investing is a much better known and understood and I think appreciated corner of the financial markets today. When I was starting in this business in the mid 2000s, endowment foundation investors, endowment foundation investing, like that was a cottage industry. There really weren't very many institutions of size that had these multi-billion-dollar portfolios and in-house investment teams. And even that, if there's a testament to not entirely having us all planned out, I think it starts from day one, where I took a step towards something I didn't wholly understand and appreciate what I was getting myself into. I felt like it was what most resonated with me in terms of the career options and job choices that were in front of me at the time. It happened to be that I wound up in a career path that I absolutely love. And a large part of that, I think, is also I tend to be somebody who I think as long as I'm intellectually fulfilled, as long as I have an opportunity to keep learning, and I feel like I'm being fairly treated, and certainly compensation is part of that, I think I'm a hard worker and I probably would have enjoyed a number of career paths. It also happens to be that this is probably investing in general is one of the most intellectually, for me, fulfilling career paths that you could ask for because there is a constant cycle of creativity and different types of investments that are being both pursued and created. And one of the benefits of being an institutional investor, going back to what you had shared, what you were so kindly described as being a really unique career path, is that as an institutional investor for endowments and foundations, and I'll step back for a second and share endowments and foundations. And if you think of large university endowments or large cultural institutions like the Met Museum have large endowments, these are multi-billion-dollar investment portfolios that have dedicated in-house investment teams overseeing these portfolios. I have been, for my entire career, for the most part, been on these investment teams overseeing multi-billion-dollar portfolios on behalf of these large institutions. And so there's multiple facets of this career path that are very, very fulfilling, one of which is, of course, there is access to a whole range of investment options. And so I have a real bird's eye view of what's in the market. What are the types of investment opportunities across different parts of capital markets?
Give us some ranges. Like, what are some of the things to help us dot out the landscape?
Absolutely. So I think as an institutional investor, I often like to describe it as it's sort of, you look at things from to go from an individual investor to being an institutional investor is in some ways like going from seeing the world in black and white to technicolor, to seeing it in technicolor, right? As individual investors, I think the first things are oftentimes the only things that you hear about over and over are stocks and bonds. And so when you have a role, when you're sitting in a seat as an institutional investor, the array of options expands into all sorts of different private market and alternative investment opportunities. Now, ultimately, you can still break them down into the main asset classes of equities and credit and real assets, but there's such a huge spectrum of what exists in equities outside of public stocks. There's private equity, there's growth equity, there's venture capital, right? Those are probably the best known. There's when you expand into the different types of credit investments outside of bonds, you have everything from real estate-backed credit to direct lending, corporate direct lending, to asset-based lending, which could be anything from aircraft leasing to litigation finance to things that I think folks are hearing about.
I mean, it's so big. It's so interesting because it's, what is available and what is possible are very different things, right? It's like anything is possible, but what's available to you, right? It's so different. And so as you were learning about all these different investments and asset classes, I mean, my gosh, it sounds like fireworks were probably going off, right? Where it's like not just balancing one segment of a portfolio, but having to really look at everything that is being, put together in this pizza pie. It's so fascinating, Wendy.
It really is, which is why I say this is one of the most interesting career paths I could have chosen. I'm very fortunate to be in it. And there are just so many incredibly interesting investment opportunities that exist outside of the public markets that, again, to what you were saying, there's so much of what is possible versus what is sort of accessible. And that is something that I think as somebody who's done this on behalf of multi-billion-dollar institutions, to know what that whole landscape looks like is really, I think, maybe for better or for worse, maybe part of the reason I don't talk about investing as much with my friends, or I previously didn't, was just because I knew what all of the available options were to institutions. And yet I also knew that they weren't necessarily available to any of us as individuals. And so it was sort of like, I think that world is changing, but certainly going back to what do we talk about in our 20s? Maybe I'm just making an excuse for myself here, but I think part of it was a lot of what I was doing day to day as a professional investor just didn't translate into our lives as personal investors.
I get it. I mean, it's also, I'd love to understand a little bit better managing these endowments. And really, when you're doing so for these institutions, one of the things that comes to my mind is obviously values, right? I mean, everyone's looking to maximize returns on portfolios, but these different institutions, I imagine, had different mandates or different values that they were looking to execute. And you've had the privilege now of being able to see behind the scenes of these different values and how those get executed in the world. Can you give or share a little light on how values might translate into different, let's say, portfolio allocation?
Definitely. I actually, so one of the things I'm going to say here is that, and this might be a little bit controversial, is that I actually think there's two ways to do this. One is your investing can reflect your values. And the other perspective here is that they can be two separate things. Because if you're looking to maximize what you value and how you support what you value, is the right way to maximize that. And there's no right answer here, but I'm simply putting this out there. There's two ways to think about this. Is the right way to maximize supporting what you value to also align those investments that you make with that? Or is it to maximize what you earn from your investments and then create more capital to deploy into what you value? And should those be separated?
That's a great question. That is a good question. So what did those answers tell you? What did you find out?
I will say part of this is my own professional experience, and part of this is the approach that we took at the institutions in which I invested on behalf of. We very much had the latter mindset, which is the investment portfolio and the investment team and the investment function. Our role and our job is to maximize returns and generate as much capital as possible, because the institutions that we were supporting with that capital and the dollars they would put out, that we would be able to give them to put out, that impact was going to be far more meaningful than the incremental impact from choosing to invest in a, let's call it, more aligned impact investment approach. And I think what's available in terms of what's considered impact investing has shifted. But there definitely was, for many years, you took a return haircut. And so you definitely did make a compromise in the returns that you could generate. And now I do think that has changed in many settings. I think there are now investment opportunities, still more on the private market side, where you can invest in things that are impact investments that can line up with their values. But I do think that is a very, very clear question that folks need to keep in mind when they're underwriting investments is, do I give something up in terms of returns? And if I do, what is that trade-off? And if I'm investing to maximize returns and I separate those two things, do those extra dollars that I generate from those better returns, can I better pursue my values and put that capital to work in a way that's really meaningful for me? And that was what we chose to know. That's what our institutions, that was a perspective that the institutions that I worked for, that was that perspective that those institutions held, which is that for my most recent foundation, the Mother Community Health Foundation, where the foundation supported really the social determinants of health, right? Every extra dollar we earned in our investment portfolio, it went to support the various soup kitchens, the various social services organizations that our foundation funded. It went to support the organizations that would provide greater housing to meet the needs when it came to things like housing instability and food insecurity. And it went to supporting mobile dental clinics or senior centers. And it was like every incremental dollar that we earned, the foundation was putting to work in a really important setting. And so we felt that was the trade-off, right?
It's also like how unique and special for you to go and work doing something you love, investing and managing portfolios, but also doing so in a way that's also bettering the world and society. I mean, those two things are not often correlated, right? When someone thinks about going and working in finance, being an investor, it's not in the realm of being able to really see massive change. And so how incredible for you to be able to say, yeah, I'm exercising my skills and the things I love, and I'm able to perform at a very high level doing this thing I love to do, and I'm able to support people and causes and initiatives that are important in the world. That's a very unique experience.
I really meant it when I said that I feel so fortunate to have taken the career path that I've taken. And it was not, I didn't know going in it was going to look like this. And I feel so fortunate because how many folks really get that opportunity, right? And on top of it all, to again, bring it back to getting rich together, these are well-compensated roles, because ultimately I was in a highly for-profit role, investment role at a nonprofit doing great work in the world.
Oh, so amazing. Okay, so let's shift a little bit of gears here. So here you are, just a total badass, like changing the world, being an incredible investor. But you also mentioned you got married and life is also running in parallel. And so I'm curious when it comes to your at home conversations, around money or around how you make decisions, and even thinking about teaching your family about, having these conversations. It's sometimes really interesting to think about because the ways in which we look to raise our families, at least in my experience, have been very different than the way we were raised, and like different sort of outcomes, different locations. New York City, very different place to raise kids, right? So how are you sort of taking your experiences and these conversations to home? What does it look like as you sort of look to build your portfolio together as a family? And then also in terms of teaching kids about money, or what are some of your initial thoughts on it?
I think my initial thought is I probably could be doing more because I do.
Sorry, Wendy.
It really is one of those situations where I think in our family, just in terms of how my husband and I talk about our finances and our investments, we in many ways sort of default to whoever has the greater insights does that thing. And I think part of it is just we're two really busy working professionals and we're raising 3 kids. And so a lot of it is by default, I make a lot of our investment decisions, right? Because that is my area of expertise. And so my husband is a lawyer and he is a phenomenally talented lawyer. And he is just not as interested in having conversations around investing. And I think he's interested in what I do, but he's not necessarily as interested in making those decisions. And so I think part of it is there's a little bit of that dynamic of we both default to where does our expertise lie? And then with our children, I've been teaching them about basic things like, okay, you have dollars. What do you want to do with them? How do you want to save? Do you want to save them? Do you want to spend them? How do you budget for things if you want to buy something? My kids, I think, don't have they don't want for much, right? So my kids are very fortunate. And I think really now with them, it's raising them with the types of values where we want them to appreciate what they have, to know that we don't always get what we want in life, but we should appreciate what we have, raising them with the idea that, the things that money can't buy are also the most important things in life. Because I think, to be blunt about it, just given the context of this conversation, my kids don't want for much. Certainly, I compare their childhood to my own, and we don't necessarily, talk about what our financial circumstances are, but I think our kids can figure it out based on the way we live. Let's be honest here, right? And so I do talk to them. I've taken the kids to go to the bank and open bank accounts for them. So that was like a really exciting field trip. I took each of my kids individually, and for them, it was like a little bit of a field trip to go to the bank and sit there and open an account. And they were really excited to count all the dollars they'd saved in their piggy bank and tell the banker how much they were going to deposit into their first account. And that's where we are now. So I probably, for my oldest at least, could probably start expanding that conversation. But I feel like you're pointing out all these things that I can definitely be doing more of.
It's so funny. So my husband and I have 3 stepkids, and our eldest, we were telling him, his name's Henry, we were like, we want to start talking about investing. And he goes, I want to invest in Recor Group. And Recor Group is my husband's company. And I want to invest in Recor Group because I know that's going to be successful. And I was like, oh my God, we have like a little angel investor here who's like, I want to invest in Dad's company and I know it's going to be successful. We're like, we want to show you about Nike and Amazon, some of these other products that you order from and you consume and all this stuff. And, his inclination was to invest in John's company. And it's just so interesting what kids pick up from us and what they see and what they experience. And we can't protect them, but we can equip them with critical thinking skills, right?
Yeah.
To help them sort of make the right decisions for themselves. And anyway, it was so sweet to hear that. And,
So
it's
sweet.
that.
Oh my gosh. Oh my gosh.
Speaking of which, I'm pretty sure your kids at a certain point soon are going to say, Mom, I want to invest in your company. And so I'd love to talk a little bit about stepping away from what everyone on paper would consider to be safe and secure and leaving sort of this corporate world to then go and become an entrepreneur. That is something that I think is really bold and it's brave, especially when you have a family and when you have a lifestyle. And this is a huge, bold risk that you're taking. So can you share, like, how did you guys as a family make this decision that this was going to be something that you were going to take on? And how did you ensure that you felt some levels of safety? Because when it comes to big risk, if you don't feel safe financially, emotionally, et cetera, then it can be hard to really pour yourself into a new venture. And you have poured yourself into this new venture. So spill the tea, Wendy Li.
I will tell you, Shama, I was very, very scared to make this choice. It was not obvious I was going to make this choice when the time came. So stepping back into that headspace, this was early 2023. My now two co-founders approached me and they raised the idea of the business that we're now building. It's called Ivy Invest. And it was the conversation that we had initially was, would you want to join us? My two co-founders asking me if I would want to join them in this endeavor to build what is now our fintech wealth management firm. And my initial reaction was, you're insane. I have this really great career and I'm in a seat that most would love to have. And so I said, absolutely not. You're insane. And at the same time, I was continuing to brainstorm with them about what this business could look like, what were the ingredients from an investment standpoint that they would really need to focus on. And the more I talked to them about it, I had this pull where I was like, gosh, it would be great to do this because I do have that particular skill set. I do think that it requires someone like me to make this successful. And I have innately a higher personal risk tolerance than I think many institutional investors might have. But the thing that scared me the most was exactly what you described, that it wasn't just making a choice for myself. I felt as though whatever choice I made, I was more concerned about what are the implications this would have for my family? What are the implications it would have for my children? And I felt, and this goes back to, I want my children to have the safety, as you described it, right? Like that safety, that security, that confidence to take risk in their lives and in their career paths. I don't necessarily want them to feel like they have to pursue a high-paying career path if they don't want to, right? Like I want to be able to give them greater optionality than perhaps what I felt like I had coming out of college. Not that I would have pursued an artistic career most likely anyway. I probably would have done this anyway because that's who I am, but that might not be who my children are. And I wanted to make sure that I gave them more flexibility, or at least give them that sense they have the flexibility. Or maybe they want to go and, be a startup founder, right? In their earlier 20s, as many, startup founders are for in this environment as well. And I wanted them to feel like, I always thought to myself, I want my kids to feel like they can take risks because I want them to have that safety and security of being able to do. And so it was in this conversation where I was worried about, do I jeopardize their ability to take risk if I do something like this? That my husband sort of shook me and he said, Wendy, you clearly want to do this. Like, this is clearly where your heart is. You're having a lot of anxiety about this in your head. You're like really in your head about this. And he said, Wendy, like, what better way to show our children that they can take risk than you taking a risk and showing them what it looks like to do something that's scary and to build something yourself and to bet on yourself. And so my husband, which is a testament to, and I say this all the time to younger women, a testament to the most important career choice that you might make is your choice of partner. And because, your partner is going to be part of that safety and security and willingness and ability to take risk, right? So my husband's pushed me off a cliff and was like, you should do this because you want to do this. We're going to be fine. Go.
Good for him. I mean, that's just how lovely. Good investment choice, Wendy.
Now, to be fair, like part of it is also, as I had alluded to earlier, like I've always been a compulsive saver. And I think part of it is, as I spoke to earlier, knowing that someday that having that base of that cushion of capital provides optionality and choice. I didn't really think that optionality and choice was something I was going to necessarily use on myself, but it, just going back to, I can dive into this and really pour myself into it because I did build that cushion and give myself optionality.
It's so powerful because I hear from so many women who are wanting to launch businesses or starting to think about that. And it's such a powerful, like owning a business, building a business is a powerful wealth expander on its own, right? That is like unlocking a really powerful financial vehicle for you. And for a lot of women, I know they pour everything into the business and there isn't necessarily a cushion or foundational plan, or it has to work out almost like strangling something before it's even been born because there's so much pressure and stuff riding on the success of the company. And being able to walk into a new venture and say, you know what? I feel secure. I feel safe. My family's on board. The amount of breathing room and creative flexibility and optionality it gives you really does allow you to put yourself in your totality into something. And I think a lot of people don't understand the framing around that and why it's so valuable. What you're building now with Ivy Invest is a really powerful product. I think it's an incredible tool that really takes, I would say, just your life's work so far and puts it into this beautiful package and bow and then delivers it to an audience that may not have had exposure to thinking about their resources in this way. Can you help unpack a little bit more about what you're doing at Ivy Invest, who it's for, right? And some of your heart that's going into the development of this?
Absolutely. And I love the way you described it. This really is in many ways the culmination of a lot of my own career path and a lot of my learnings from my years as an institutional investor. One, I think what we're doing is best described as endowment in a box, right? So going back to, there's this huge disconnect between what I could do from an investment standpoint as a professional institutional investor managing billions of dollars and what I could do in even my own personal portfolio as an individual investor. And that disconnect has existed for decades at this point. Like it's egregious. And it was one of those things that my two co-founders, when we were chatting about it, that was part of why I was so eager to brainstorm with them, because I recognized the disparity and I recognized how unfair it was. And I, having lived it for quite some time, almost 2 decades, in my own, disconnect between my professional self and my personal investor self, I really appreciated that it is something that is a gap that really should have been bridged by now, but for any number of reasons had not been. And so we took it upon ourselves when we were building Ivy Invest to effectively say, this is a problem, it's gone on for too long, so let's fix it. And it took the disparate skill sets that I and my two co-founders have to really build what we've built, which is endowment in a box. So a fully allocated portfolio that is professionally managed by me, where I am investing in a portfolio across stocks and bonds, but also private equity, right? Private credit, special situations, opportunistic credit, real estate, infrastructure, offering those types of investments in a total package so that for our end investor, it is, do you want a broader, more diversified portfolio than perhaps what's currently in your existing portfolio, if you're investing today in stocks and bonds, do you want to expand that? And do you want to expand that in such a way that it is an easier decision point, right? Because I think for somebody who has not previously evaluated real estate or has not previously evaluated different types of private equity investments or different types of private credit investments, I think that can be daunting. And I think so, if somebody's already just coming up the investment learning curve, it is a way to bring
It's
the
daunting
full spectrum.
and scary, Wendy. I'll just interrupt and say it's also people want to get access to things and they want to invest in things, but it's not only intimidating, but can be scary if you do get an opportunity to invest, but you're actually not an expert in that thing and can't do the diligence. It's beyond like also getting exposure. It's like the first step is like, how the heck do I get access? And then once I get access, how can I diligence this opportunity and know that it's actually worthwhile? I mean, all of the asset classes you just mentioned, it would be nearly impossible for any individual who doesn't have experience to be able to know how to evaluate this. I mean, it's really wild.
It is. And I think that's something that is actually a really important point, because you're better off not investing in some of these asset classes than investing behind a poorly executed version of these asset classes, because they are more opaque, because they are not as liquid, because it is a different type of risk. And a huge, huge part of becoming a professional investor and of being an institutional investor is just continuing to refine your ability to assess what that risk return framework is for any investment. And so I have, 2 decades of saying and assessing risk and saying, am I being appropriately compensated for that risk across a lot of different spectrums, like strategies, asset classes, investment managers, and the people behind these investment strategies. And I think that's, to your point, it would be hard for someone else to replicate that. And we recognized it was hard for someone else to replicate that. But we also felt that shouldn't be the reason that individual investors don't have access to this wide variety of asset classes that provides a very different type of risk and return, and ultimately a different type of investment portfolio and opportunity set for individual investors. And so that was part of why we felt it was so important just to bring the total package, that endowment in a box. So our end investor makes one choice. Do they want this? Do they not want this? And it's okay. It's not going to be for everybody, and that's fine. But for those who do want it and where this does make sense, we make that super easy from a decision-making standpoint, but also this goes back to my 2 co-founders and their skill sets, easy from an investment and customer experience standpoint, because we're a fintech company. And so we are app-based. We are, our website provides access to individual investors. It is available to all investors where you don't need to meet a certain wealth level. We have $1,000 minimum
Which
investment.
is different. So let's double click on that, right? It's, you come from this world of managing billions of dollars, and now you're saying here you can have access to the asset classes and diversification for only $1,000, right? I mean, it's a really incredible opportunity for people to be able to capture, again, your life's work so far in a product at a low cost. Maybe instead of Ivy Invest, it should be Invest with Wendy. What an incredible product and service that you're providing, because it also opens the aperture for people who may not have realized, what is available with their money. And for the people who are wondering, how do I get ahead? For me, it's like, I'm not going to have any sort of big inheritance from my family. Like for me, it's about finding those opportunities where I can really have some big delta in my life. And part of that is, for me, diversifying heavily on my risk exposure. And I think that, being able to have opportunities to invest in this way is really incredible, Wendy. Thank you for building this product.
Thank you. We're very excited. We wanted to broaden the umbrella as much as possible, right?
Yeah, I think it's wonderful. As we start to wind down our conversation, I want to just put our lens even more focused on legacy. We're all living to egregiously old ages now. And by the time you and I are 60, I think most people will be dying at 120. But for all intents and purposes, let's say we're on this planet for, an early age of 105. But what is the legacy you're looking to leave? Like, what does a completed life on this planet feel for you?
I know we've spent so much of our conversation really around the professional aspect of what I've been doing. I have to say, first and foremost, a completed legacy for me is really around my family and friends. That ultimately is going back to the most important things in life are not achievable, can't be purchased, right? So you can't purchase them no matter how much money you have. Those relationships are the most important to me. My legacy, I would say I'd prioritize what my children think of me, what my husband thinks of me, and what my friends think of me. And right after that, then certainly, of course, like I care about the legacy that we're leaving in this business that we're building. And hopefully we're creating pathways for more people to build wealth in expanded ways that they didn't previously think possible. And really trying to narrow that gap between what billion-dollar institutions do and what individual investors do. And that is meaningful if that means that I can help that next young woman in her 20s build the kind of safety net for herself, buy her first apartment before she turns 30, give herself flexibility to take a risk later on in her life because she's built a cushion, right? If I can help people do that, that is incredibly meaningful as well.
Wow, I love that so much. And then my last two favorite questions. So the first is obviously you're a saver, you're diligent, you've got a plan. It's Wendy with the plan. But one of the things that's also fun about money is how we spend it and like the things that bring us joy. And what are the fun things that you like to do with your money?
I'm not a big purchaser of items that are expensive. Much as I talked about, sometimes it's hard for me to let go of little things that are just like sentimental in value to me. But I do definitely splurge on experiences. And so I am a big fan of making sure that when we travel, I like to travel more comfortably and I like to make sure that we're staying in hotels that are more comfortable. And so for those kinds of things, I definitely will splurge for. And certainly when it comes to traveling with my family, we try and take big family vacations, like with my parents and my siblings. And so if I can spend more of my dollars to make sure we all get to do something I also really do selfishly want to do, that's a really great use of dollars.
I agree. I think that's a really good. You're like, all right, who's the boss here now, guys? And Wendy, my final question is really around what we as the audience can do to support you. As you're up on this big mission, you're building something powerful, you're out here changing the landscape in the world for people who could not have access to these sorts of products. What is it that you need help with? How can we help evangelize you?
I think we're in the early days of getting the word out on our business. We really opened Ivy Invest up to folks in December of 2024. Prior to that, we had been investing predominantly our own capital and some friends and family capital. And so really spreading the word and letting folks know that the possibilities to invest in alternative and private assets now exists in a way for everybody at a pretty reasonable, we think, minimum. Spreading the word it would be huge help.
Amazing. And so for everyone to know where to spread the good word, it is ivyinvest.co is the right place to direct everybody. Wendy, you are an incredible human. I am grateful to call you a friend. Thank you for sharing your life's work, your vision, and all of the incredible things that you're up to. Thank you for being here today on Getting Rich Together.
Thank you so much for having me. This was such a delight.
Thank you so much for tuning into this episode of Getting Rich Together. Please take a minute to subscribe. And if you like this episode, I'd love it if you could share it with a friend who is ready to elevate their financial future. Until next time, let's keep getting rich together.